Hi, this is Simon with Trade and Perform Coaching, doing the trade review for Friday the 13th of June, Friday the 13th. And ES did not treat me very nicely on Friday. So coming off of a real good day on Thursday, I was concerned about two things. First of all, my first concern was that the volatility would dry up, and it did, right? And then the second problem that we had coming into the day was the buyout from Open Table really drove NASDAQ higher, and it didn't give us the open we would have had otherwise. And I'm pretty sure that open would have driven us into Thursday's low and Globex low and given really nice position back to the upside. The plan has been all week long was to take long side trades on any dip the day after a trend day down. And it just didn't lay in that way. And additionally, I was probably a little too, I don't want to say I was patient. I actually took my trade setup. The first trade I took was a trap trade right here, and I simply got stopped right there. There was nothing wrong with that trade. The second trade I took was an A-grade trap right here, and this trade was a problem for me, and there was a reason why it was a problem. I lost my patience with it. Originally, the stop I believe I had sitting at 1930 and change, which was right up here. And I got impatient with it, and instead I lowered my stop down to 1928.50. So my entry was actually 1925 3/4, and I ended up on that trade with a 3 1/4 point loss. However, had I not moved my stop, I would have ended up with a 2-point profit on this trade, and I also had plenty of time to simply say I've been in this trade for too long on a Friday afternoon in the summertime. I'm just taking my point and moving on. Either picture would have dramatically changed the outcome. Instead of taking a 3 1/4 loss and ending up the day minus 5.5 for the day, I would have ended up being down 1 tick for the day had I simply stuck to my rules. So I can be an example for both good trading. I can also be an example for bad trading. And I think that's, like I said, I think that was a very good point. The other thing that, let me clarify what I mean by that. What I want to show is it's very easy mentally. Okay, so a slow market, I did not say that well. A slow market, okay, tricks you into making poor decisions, right? It just simply mentally wears you down until you finally say, I give. I did that. Apparently a bunch of other people did that. They finally said, I give, and they got run over, okay? Secondly, we're in balance here, right? See this? This is complete balance right here. How does balance work? Balance, new lows get bought and new highs get sold. And I said after the first hour we were likely to go into balance. Here's the 930 and here's our balance. I didn't make the shift. So two critical areas where, and again you'll see again, we hit new lows here, reversal, drive back into the middle. So I made two critical errors. First one was I moved my stop. That cost me money. The second one was I was not trading for balance. I could have easily planned to have taken this to the short side. I did not do that. I'm not going to be too hard on myself, but lesson learned and adjustments will be made for next week. I've been kind of regretting being a little bit fearful of Father's Day. This is the first year without my dad. I'm sure that's been affecting my ability to trade a little bit. NQ actually ended up making a point on NQ for the day. Got stopped on my first trade, made money on my second trade. ES just didn't ES would have panned out. Let's correct it. This would have been a different story if I simply stuck to my trade rules. ES would have panned out. I would have had my 2 points in the pocket, and I could have rolled on to the next day. Instead, I ended up tacking on losses. My notes have been made. I'll make the adjustment for Monday and hopefully right back on track, right? So the next thing I want to do, because there's not a lot to talk about here, is let's take a look at the week in terms of bigger picture here. Okay, so this is our entire week. As you can see, it would appear that we actually had a pretty decent down day, but the only day that actually worked really well to the short side was this day right here, and we nailed this, right? I had the short in right here to the downside. Everything else, every other single day was balanced. And also the other thing I want to note in terms of characteristics, right? You'll notice that every afternoon in the last hour, we drove up consistently. Every day we drove up in the last hour. Okay, so first thing is I'm going to be a little hesitant until I see that pattern break of driving up in the last hour. I may look for a way to take advantage of that if I can position properly from those lows. Rotations wise, we didn't have much more than 10 points was about the maximum stretch we could get intraday, and I will be looking at that to see if I can find some structure next week if we're going to stick to that pattern. If 9-10 points is our biggest stretch, then yeah, I'm willing to adapt to the market and look for counter trades back to the upside, right? And then the other part is, even though we're pulling down, we're simply not very weak. We've repaired this poorly auctioned area all the way down to here, and there's no rule that says that we have to come back and complete and finish re-auctioning this area down here. And then the last piece is, it's summertime. Don't be too hard on yourself. There have not been a lot of trading opportunities this week. I think, and I want to go in here real quick as long as I have everyone's attention, right? Let's go and take a closer look. If you look past the first hour on most days, right, after the first hour, we've gone into balance with the exception of the very last hour. Right as soon as the first hour completes, we start trading these balance days. So at any rate, I will be looking to get most of my directional trades done within the first hour. I will be looking for balance after the first hour of the most of the week, and I will be leaning, until I see the pattern change, leaning to the long side until that no longer develops. There's no point in being bearish when bigger picture, we're doing the buyers are stepping in consistently and moving us back to the upside. The other thing I want to look at, let's take a look at a bigger time frame. Okay, when we look at a bigger time frame picture, right, this is your trend lines right now. Okay, until that gets broken, we have an uptrend. Furthermore, you could also argue that this, right, this was our uptrend. You can see we backside tested that. And then you can also say critically, right, that the next area of structure we have is right here. And if you look, we came right into that structure. I'm going to show you. Between here and here, okay, that's our structure. And you can see we've come right into that structure. So until we trade below this 1919 and a quarter to 1920 and a quarter, and then the bottom side of that structure is sitting right here at 1910 to 1906. Okay, so these areas are still valid trading areas. I would they're just general. These are our it's just a general, hey, these are our areas where I'm looking for reversal. I didn't do any work on there. I need to go in and look at the volume profile and you know, I'll get the zones narrowed down perfectly. But generally speaking, right, below here we have these areas. Let's erase this real quick. Okay, and take a little bit closer look at that. Okay, so above, as far as structure goes, right, we obviously have Friday. We've rejected out of that 1930 area, right? But you can see over here, here's my conservative that's 1930. We have rejected here, but we've traded through here relatively easily multiple times, and that offers me an area of concern. We have the top of structure right here, so I would assume somewhere between this gap, this 1936, 1937, right, is going to offer us our first area of rejection on a stretch to the upside, right? And generally speaking, I'm going to have to go in and do some research on the middle in here, but what would be really nice is if we just simply come up here, close this gap, and move to the downside. If we get above that 1938, essentially, right, above 1938, takes us right to this open gap, okay, where I would expect, again, 1943, 62, that'd be our next area of major resistance. It is very poorly auctioned between 1937 and 3/4. Actually, let's correct that, 1936 and a quarter, all the way up to 1943 and 3/4. It's very poorly auctioned, right? So what that means is we can very easily slip through this area before finding any resistance. I'm keenly aware of that, and this is exactly an area where we can just do a slow grind through here and drive people nuts. So be aware of it, and then it wouldn't take much to get right back to the old highs, okay? Below us, we're still poorly auctioned below this point. Okay, from 1923 right now down to 1920, and then below that we'd have Thursday's low of 1917.50, and then below that bring us right into this area down here at 1914 and the 1914 area. The last thing that I want to leave you in doing this trade review, right? And that gives us kind of the immediate picture is this. Look, trading is difficult because it requires understanding two things. First of all, being able to put together a picture of where you think the market's going, right? But then there's an additional trick which is harder to explain, which is this. Look, if I take my account and I take that same account and I simply want to trade whatever, relatively small. I want to trade 10 contracts, okay? If I put 10 contracts on, I have the luxury of waiting all day. I'm pretty good at reading where the market's going to go, and I can say, well, we're likely to go up here, or we're likely to go down here. I know when we get good stretches on the day, meaning we're very stretched, that we're likely to get a reversal in the day, and I can simply lower my trade size and go, okay, here we go. This is what I'm trying to achieve. I'm pretty sure we're going to rotate to the upside. Like on Thursday is an excellent example. I knew we were very extended. I knew buyers were likely to step back in. So I could cut my trade size down to a fifth of what I normally trade. Okay, just put the trade on, and I know that probably 75% of the time I'm going to hit my mark. Okay, meaning I'm going to get it. But that's not what I'm trying to accomplish. What I'm trying to accomplish is have trading with a leveraged position and to catch the direction exactly correct and take as little heat as possible. Now, you could argue that I'm making it harder than it has to be, but what I would argue is there's only a few ways to really make a lot of money in trading, okay? And that by focusing on your highest odds trades, concentrating that position, but making sure that that concentration is based on A, actually being able to execute successfully at a high rate, meaning you start off small, you work up big. B, you're able to stick to your trade rules and increase trade size as you're moving forward, right? My goal is not to make 10 or 15 or 20% a year, but to have significantly higher returns. I actually don't even think trading futures is worth it if you're not trying to make a significant amount of money. So there's no snake oil salesman here. There's no get rich overnight scheme, right? It takes work. It takes structure. You have to constantly strive for being the best trader that you can be, and having the patience to take your best setups, right? That is why I trade the way I do, and that is why I take the stops that I do. When I nail it and I get the trades correct, like I did on Thursday, and I get an 8.5 point move, right? I get paid in a big way. You got to remember on my spreadsheet that I post, all I'm posting is the first 2 points that I take out of a trade. Why do I do that? Because I'm trying to show that even just taking 2 points per trade, right, and taking only your highest odds trades, that you can still make an enormous amount of money. Okay. However, that being said, right, if you don't stay structured and you don't stick to your trade plan, right, and you give in to taking these small little trades when the market gets into balance, you set yourself up to get crushed from being undisciplined. And what I mean by that is I spoke to several people, right, who told me that they had great days because they were able to take this trade multiple times. They took this long right here, and right here. As a matter of fact, the first person I spoke to wanted to take the long right here, okay, back to the upside, because they figured that's the backside test, and we were going to take off to the upside. In my opinion on ES, that's undisciplined trading, okay? And then their biggest down days were actually when we had the widest range, which was on Thursday. Okay, so tiny ranges in ES tend not to stick around. I don't care what anyone's saying about less volatility, so on and so forth. Tiny ranges tend to not stick around. We don't have to have huge volatility, but this is extremely small volatility. If you get used to taking 1 point trades in each of these little areas, right? When we come over to a day like Thursday, where we have this huge range right here, my bet is you lose far more on this day when you're trying to take these little small trades than you make on these little balance days, repeatedly taking the same areas. If you're even making money on these days, and my guess is most are not. Okay, so at any rate, that's my point. Stay disciplined, stay focused, find your highest odds trades, right? Keep careful details of your own statistics. If you can't measure it, you can't improve it, right? And then realize there's a human element in trading, okay? And that means you have to have the structure, but then you also have to use some wise decision making wise decision making and have some flexibility. For example, if there's a Fed speaker speaking and you want to trade while that Fed person is speaking, you're exposing yourself to a sudden move based on one trader coming and making a statement. It's one person making a statement that can move the market huge. Why would you want to take that risk when you can just simply learn structure, breakdown, test, retest type of trading that happens day in, day out? Secondly, if you can't keep your hand away from the mouse when the market's trading slow and you're trying to use tight stops, you're just going to get very, very, very chewed up. It's really heartbreaking to see traders, right, come in with that have talent, right? But because they have to make money right now, they cannot wait for the market to resolve themselves. They end up giving back a lot of money. The whole point of the exercise that I do this, the whole reason that I'm on StockTwits, the whole reason that I'm on Twitter is to teach traders how to go from being boom bust traders to being consistent day in, day out profitable traders. And it's not easy. It takes work, and the work part comes on the personal side, finding out why it is that you're trading. What trades fit your personality, right? What trades fit your risk profile. So anyways, my name is Simon. I hope that helped a little bit. My one key would be this. When it's slow like it is, do less, okay? Be patient. Let the market come to you. Don't chase, okay? And most importantly, have your trades structured to reduce fear. The way you do that is you pre-plan your entries, your exits, and your stops, and you stick by those trading rules. They help you enormously. And so just like as I broke my trading rules on Friday, I moved my stop. I ended up handing myself a 3.25 point loss instead of a 2-point gain, simply by running out of patience, right? I want to be an example for others. Stick to your trade plan. It'll make you money if you actually have a proven edge. If you don't have a proven edge, that's another conversation. Okay, so I know the zones give me an edge, and at any rate, I hope that helped a few people out. I know I went on a little bit longer than I wanted to, but I really want to help traders move from being frustrated, either losing traders or break-even traders, to making a profit. And the way that you make a profit, the way that you stay profitable in the market, is that you learn its structure. Okay, you become patient and let the market come to you. You enter on good stretches. Okay, and when the market's not showing you its best opportunity, you simply choose to pass. Okay, so anyways, everyone have a great day. My name is Simon with Trade and Perform Coaching. I hope everyone's having a wonderful Father's Day. I'm going to enjoy a bit of Father's Day myself, and we'll talk to you later.